Welcome to Real Estate Hustlers Podcast. I'm your host, Josh Appleman, founder and CEO of Appleman Capital. Today we are joined with Joe Pizzurro, owner of Breakchain Capital Investments, has grown his multifamily and self-storage portfolio to over 4,000 units and $70 million in assets under management since 2020. His goal is to have 10,000 units by 2030. Joe, we appreciate your time today. If you could let the listeners know a little bit more about yourself.
Yeah, thanks for having me. Like you said, started this venture in 2020. It was kind of a time where a lot of people maybe had some spare time to think back then, and got into real estate investing. I just jumped straight into the deep end with commercial versus single family. I did a couple of single family prior, but wanted to do more exponential returns, and started investing in apartments and self-storage as a limited partner in syndications, and then graduated to be doing the general partnerships. So I sponsor these deals now for about the past 3 years now. Got a portfolio with diversified with both self-storage and apartments. I like to have both just because, there's pros and cons to both. They're a good balance. The apartments are good for depreciation, and you get more equity out of them. The storage is better for cash flow and easier to maintain. So, I like having both of those. But excited to talk to you and answer any questions.
Yeah, well, tell us the backstory. You don't certainly don't accumulate over 4,000 units within a call it a 3.5 year time period. What's the backstory? What were you doing before, and then what groups did you join? What rooms did you enter to propel your growth?
Yeah, sure. So I started out doing project management, a little bit of construction on that side as well as IT. Started working from home during COVID and had time to start exploring, what other methods of income are there for passive income. And so, those are that's the direction I chose. But really, I joined some mentoring groups, kind of educated myself a little bit, but mostly just, jump straight in and sink or swim, But a lot of those units are self-storage, so those are, easier to accumulate. Those include, storage units and boat and RV storage parking. So it does. If it were simply apartments, that would be more impressive, I think. But it includes.
It's a large portfolio, regardless. It's incredible. Tell us about your first deal. What that looked.
So I closed on my first deal in May of 22, an apartment complex, 89 units, and we raised about 3.8 million to put that one down. That was back when it was capital was a little bit easier to find before the interest rate cuts. And so we're doing well. We're in the middle of a cash out refinance on that one. So we should be doing a small cash out refinance probably at the end of this month. We should close on that. So that was a good story because it was a bridge loan. And we've all heard some of the failures of bridge loans over the last 3 years where, the property did not qualify for the extension. They were either forced to sell at a loss or foreclose or a capital call back to investors. So this one, we were able to do not only a cash neutral, but a small cash out refinance just by purely operating the property to a high standard, keeping it full, raising the NOI, keeping collections high. And so we were able to make that happen.
And what kind of property was that?
89 unit apartment complex.
Okay. All right. So value add, did you all do renovations to increase the rents?
Yep. And we got a lot of increase in addition to rents by just other things. We saved water conservation. We did.
How did you do the water conservation?
So we had two different ways. One is installing low flow toilets, but another is you can install a valve in front of the water meters that also help manage the flow of water.
Did you see a significant difference with that valve?
We're starting to. So it's different for every property. It depends on how big the diameter of the pipe is and how many of them are there. So definitely something to continue to monitor.
That's we're looking at the same thing for one of our properties. Are you all leasing the valve, or did you buy it outright? And how much was it?
We purchased it.
How much was that purchase?
48,000, something around there.
Got it. Yeah, it's got to make the cost has got to make sense for the return. So that's going to be one of our. We haven't been sticker shock yet. They're still they're drawing up the reports to see what savings are there. But one thing they had mentioned is to see if it makes sense for us cost wise. I'm like, well, that tells me it's going to be a pretty expensive valve. So that's and it is. But at the same time, I mean, if you have enough runway. Meaning hold period, then it could save you a tremendous amount of money inside the property too.
Yeah, and just I remembered that was on another property we did that, not the one I was referencing, but yes, we did both of those on two different properties.
Got it. Very cool. And then low flow toilets, that's it's an easy win, and you can really see that economies of scale once you start to replace all the toilets versus the old ones. So I totally agree with that. Very cool. So you have organic rent growth just by bringing it up to market rate through renovations, and then utilities, as well as plugging in the right management, overlooking at expenses, making sure there's not necessary expenses. I'm sure. Any other ways of adding value to your properties?
Yeah. One thing we like to do is bulk cable internet.
Yeah.
So we put the whole property on one account, and we get a 50% discount from the provider, and then we just bill back the tenants with a small premium, and they're still saving money compared to what they could get on their own, and we're saving money, of course, and then the provider is adding subscribers, so they're happy. So it's a win-win-win.
Are these B class, C class? What's the tenant?
Yeah, these are mostly B and C,
okay.
Late 70s or early 80s properties.
Got it. I know we've talked about the internet. We're just unsure if we would be truly selling on the tenants or if we get stuck with paying for their internet. Because I mean, we C class, B minus, C plus. You have turnover. That's the workforce housing. It's constantly managing with an iron fist.
Yeah, well, it's all about the location too, because we found in the property these are townhome style units, and we've got a lot of 3 bedrooms, so those are hard to find. You know, the 3-bedroom townhome style with the little patio, and so we did add some fenced yards and charge a little extra premium for those, and the tenants want them, so we're going to add some more.
Yeah, no, I totally agree. The townhouse style that have not been converted over to condos, those are tough to find for sure. Awesome. So that was your first deal. How did you come about? How did you find it? And then what you got involved with a group, general partnership, and you helped take it down. And tell us a little bit about how it all came about.
Yeah. So a good partner I work with is they're called Old Capital. They're a mortgage broker. So they have a lot of connections locally, and so that's how I was introduced to the deal. And underwriting it underwrote very well compared to I had underwritten maybe 50 other deals that year. Yeah. And just the numbers worked on that property, and it was also just a great location, great demographic, great nestled in a neighborhood, no real heavy comps around it. So
those are hard to find.
yes.
And so that was a pocket listing and not on the market, not exposed to a ton of groups.
So I can't take 100% credit. We did well with operations, but we also had a nice, a nice property to work with. So
yeah, that's half the battle too, is making it all make sense. For sure. Very cool. Awesome. So then picking up some steam, what does your second deal look like?
So then we grabbed one in Irving. This was 92 units. And we literally, that market's just probably one of the strongest markets, I think. And this was a B class. And so we haven't even really done any upgrade to any units, but we've been achieving, the rent increases nonetheless, and just keeping operations tight. We did some rehab, cosmetic, to the property.
Curb appeal.
Curb appeal. But it's just, we try to find strong markets that, that makes your job a lot easier.
Yeah, you're fighting against the tide. If not, it's we've had really both. I mean, it's a tough. You got a great. It's finding the property, finding the area, median household income, and then is there tenant base? What type of tenant base, and making it all work. Are you all using third-party property management or in-house?
Yes, we are using third-party property management.
How does that? What does that relationship look like when you're renovating the property?
Good, and we get involved. We manage our own renovations, but we let them handle everything else. But we handle the CapEx management.
Got it. It's just communication on who's outgoing, who's being evicted, or who's moving, breaking their lease, or moving on. Got it. Yeah, that could be very effective. That way, they're handling the operations, the lease ups, just passing them, handing off a new rentable unit to them every time you get one turned. That works. What are some lessons learned so far that you would have done a little different if you knew what you now know?
Oh gosh, there's always some of those. I would think mostly is just marketing, getting out there more. I think I was so focused on operating the properties, I didn't get out in front of investors a lot. So I probably could have taken down some bigger deals. So I'm trying to focus. That's why I'm here talking to you.
Yeah, getting out front. That works. Stay relevant.
Yeah. So just getting out there more, making more connections, because that's how these things become possible. Is through your network.
Yeah. What do you see on the horizon with deal flow?
So it's been slow this year, but we're still out there looking. I think it makes sense to buy this year for the reason of cost basis. If you can make the numbers work as far as the debt, that's going to be the struggle. But I feel like we're hearing an indication of a rate cut in September, and we've got the election in November. So those are two big triggers that could open the floodgates, so to speak. So
the 10 years looking really good.
The past several days, it's down over 50 or 60 basis points. So
yeah, I haven't seen it 3.78. I haven't seen that in a long time. I mean, you're grabbing debt into fives at this point.
Yeah. So we're in those first two properties I mentioned. We're in the middle of refinancing both of those, and we've been waiting for something like this to happen to get us close where we need to be.
Float to close, and right when it closes, you get something that'd be nice. You just don't know what's on the horizon from here moving forward. I mean, there's so many things happening right now with the overseas, just on a global scale. It's I don't know if it's time for a reset or what, repricing event. We'll see.
Yeah.
What areas are you all investing in? Like what predominantly? Is it the Sun Belt?
I feel during this time I've been sticking with DFW, just because I know it. I've lived here 30 years. I know what I can get for rents around here. So I feel more confident. And just with all the population growth and job growth here, it makes it safer, I think. If I went out to a different market, I'd want to team up with somebody that's there on the ground.
Yeah.
Yeah.
Heavy on the operations too, to know what streets are good, which streets are bad, for sure. Is it true that normalized occupancy is like 89% in DFW, just with all of the supply?
Yeah, no, I've seen like Fort Worth is I think averages around 92%.
Is that okay?
My properties have both been about 95 or above.
That's
And that's
doing
with
good.
we're pushing rents too. So we're happy with that.
That's amazing that the population growth just continues, because I think it's like on a 22-year streak of massive population growth.
You think it's got to stop at some point, right?
But new companies just keep on relocating in there. I mean, it's just very favorable. I mean, it's a massive market. Do you think it's too late for new people to enter the market?
No, I think it is. We usually project 5-year holds, and if it's within 5 years, I don't see it slowing down very much. So I think that's still a good window.
On the self storage front, you had mentioned cash flow, less depreciation, of course. How much of your all's portfolio is on self storage?
So we're in a portfolio of a couple thousand units near Houston area, and then a couple of properties in DFW, about 500 units each. We like to go for they've got the boat and RV storage. They've got U-Haul rentals. They're usually mom and pop owned, and they've got.
Do you keep the mom and pop on board, or what do you?
No, but those are good. I like those because they're value add. They've got so much opportunity, and then usually there's empty land to expand, and so there's a lot of methods for income.
Low-hanging fruits.
So there's more opportunity. So, but yeah, we're finding success there with storage, because obviously you can't use the agency loans for storage, so you're not getting that mid fives on a Fannie or Freddie loan, right?
Yeah.
So you're stuck with maybe a CMBS loan or a bank loan, and those aren't looking very nice. So we're getting a lot of seller financing.
Nice.
The
Okay.
seller is able to get more purchase price if they agree to finance it themselves. So
yeah, that's huge. And then low-hanging fruits. Do you all go in and like automate the like put a kiosk there and automate the deal, or keep
that's our plan. We haven't done that yet. To be honest, we don't need to even to hit our projections, but that's something we are working on, especially at one of the locations. We don't think it needs a body there, so we will slowly wean off, and that'll just add additional income because or additional savings, I should say, that we didn't factor in.
So what does that look like with nobody there? Is it a kiosk, or is there anything, or what is that?
We don't have that yet, but we have someone on site, but we have a call center.
Okay.
So when you call, someone picks up the phone. You don't need somebody on site. We also have the U-Haul rentals. There's ability to do unmanned rentals with a drop box for the key and pick up and drop off. So there's ways around it where you don't need someone there all the time, especially because it's different than apartments, right? You see people maybe once, they put their stuff in, and you don't see them anymore.
And then they end up leaving their stuff, and you have to
forget
auction
about
it. I know that there's a lock called, I think it's Da Vinci lock or something along those lines, where you send a code and they get an access code, and it's automated. I've looked into it a little bit, but I mean, when you can have a facility that's
Sorry, I lost you there for a second.
Yeah, I'm not sure what happened here. Disconnection. Um, I was mentioning the Da Vinci door locks, where it's basically
Oh
it's
yeah.
fully automated, and I mean, if you can have the business fully functioning with no hard overhead as far as salaries go, that's huge.
Yeah, and well, and the thing is, we don't want to have to depend on that, so we make sure the deal works regardless. But then, if we can make that happen, then that's just extra, and that sweetens the
Yeah,
deal. Yeah,
yeah. What have you been following AI any?
I have, and actually, interesting you bring that up. I'm into blockchain as well. So that's something else I'm working on is the tokenization of real estate assets.
Yeah,
Um, and
yeah.
so you
Doing
can
that real cool.
technically, the way we raise capital now through a syndicate, the investor, their ownership is in the form of just shares, right, of ownership. And it's not very liquid. They can't really cash out unless there's a sale of the property or some cash event. Where tokenization allows, a little more liquid. They get their share in the form of tokens that they could sell on an exchange during the hold and pull out some cash.
Yeah.
So that's something I'm looking into as well. But as far as AI, mostly just automation of, answering calls. I don't know what you've seen so far. Like,
I think that there's a disruption on the horizon as far as I think it's already here as far as what I mean. ChatGPT introduced what's possible as far as just conversational AI, large model, but I mean customer service industry is wiped out as far as human interaction goes. And you mentioned you have a call center, but I mean if you can prop that company up 24/7 and not worry about if
yeah,
someone's going to be on the other line, I mean, return's infinite because you just don't know what you're missing out on until you just know that you can now measure 24/7. But I think that there's going to be a readjustment in the labor market because it's going to displace a lot of people that may or may not have different skills to offer the workforce. But to leverage the AI component in an operating company like self storage or multifamily on a property management side, I think it's going to be huge for the customers, and now they get service when they need it. And then on the operators end, they know that their business is being manned when they need it to be manned as well.
yeah. Oh yeah, I'm bullish on AI. I think that's the future. And I think, I don't know where I saw this, but it's something like 40% of all jobs will be automated within the next 10 years. I believe it.
It's here. It really is. And I think people are saying it's coming. It's coming. I think it's here. That they're going to be called chat agents or just an agent in general that'll be your assistant. I mean, those are out there largely, and I mean, everything's in its infancy, but the fact that it's actually on our doorstep, it's here. It's kind of telling. And following Elon Musk, what he's got with the robots, and then he's got the chip implants. I mean, it's scary what the future holds, but it's truly happening. So we'll see. It's the superhumans running around. But
Right.
ultimately, I think AI is being. We use Appfolio for we operate, we manage them. We use Appfolio, and they've got Lisa called it. It's an AI. It's scheduling appointments, and it takes away the front end, but a lot of these platforms need to incorporate that AI component in order to even stay relevant. And that goes all the way down to the front line too. So we'll see. It's just how much more effective can you run your business, and then essentially effectiveness is efficiency, which lowers your cost too.
Yeah, no, I think just like anything in the future, we're going to have to start factoring that in because it's going to become a normal practice at some point, and you just got to become part of your business plan.
I think if you don't have it, then you become the mom and pop.
Yep.
So it's kind of like the person we want to buy from, we become because
Right.
we didn't adapt.
Yeah.
So what's on the horizon for you? I know you said you say 10,000 units by 2030, which is definitely achievable with your track record you've got so far. What does it look like? And how are you going to know when you get there?
Yeah, well, I think it's all about. I gave myself some runway because I try to find the right deal, and if the numbers aren't working, so there hasn't been much traffic this year, because we're turning down lots of deals left and right. And so gave myself some runway there, but looking for more storage right now. To be honest,
Yeah.
it's still looking for apartments as well, but I think that model, like I mentioned, the boat RV near a lake, it's just it works. And if we can arrange the seller financing, that makes it a sweet deal for everyone. But yeah, no, I think I like having both in my portfolio, though. One makes sense to hold longer. The other one makes sense to flip it, the
Yeah.
apartments. But I intend to then, in addition, start a fund. That's my next goal. And then also I'm in the process of vertically integrating my company. So we'll be starting to do our own in-house CapEx and renovations.
Got
So that's another that's on the horizon as well.
it. Bringing the crews in-house employee base or subcontract base, but managing in-house.
Subcontract and managing in-house.
Yeah,
Yeah.
that's smart. That's we've tried it every different way, and all roads go back to keeping them as a contractor. They know what they're
Mhm.
making, we know what we're paying, and uh, get it done as fast as possible so everybody's happy and everybody wins. Um, there was a pod, or not, I mean, it was a YouTube video as an operator, self storage operator. He sold his portfolio, rolled it up to PE. I think it was over $1 billion. I can't remember the name, but I mean, he created a massive, massive portfolio and rolled it up. But and he somehow did it predominantly on his own. I think large part through, of course, seller finance, and then buying, selling, filling the cup up, and deploying equity. But I mean, you could truly create a massive business off of just your portfolio, just through the years.
Yeah, no, and that's maybe a future plan, is find a buyer and just sell the whole portforio at some point when it
Yeah,
gets
roll it
large.
up, and massive exit, and then you're figuring out what to do thereafter. That's what it is. Cool. If somebody wants to reach out, learn more about you, possibly invest with you, how can they get a hold of you?
Yeah, so my website is breakchaincapital.com, or you can reach out to me on email, joe@breakchaincapital.com.
Awesome. Definitely appreciate your time today. Look forward to following you, and we'll talk soon.